Hey everybody, this is Abby Finance here. We're on a mission to educate our listeners about money. Please subscribe if you like what you hear, and leave a like or a comment if you want to learn more. Today we're going to do a company comparison within the Robinhood app, and the two companies that we are going to take a look at are Coke and Pepsi. So first, we know Coca Cola's ticker is KO, and that's because we are actually a shareholder of the Coca Cola company. So as you can see, today's closing price was $42.07. And today's closing price doesn't mean much. To really put it in perspective, you need to start looking at it over a longer time frame. So over the week, there's very little change in the price. Over the past month, Coca-Cola has been on a small rally, which is pretty nice as a shareholder. Picking up 5% here or there is always nice. Over the past 3 months, it's been relatively flat. There was a big dip there in early February, and before that, the price was actually pretty well close to where it is now. And then looking at a full year now, Coca-Cola is actually negative for the full year of basically March 2016 to March to 2017. And the high price that Coca-Cola hit in the past year was actually $45. So there's not too much more upside there, maybe $3 more per share. And that's all right. Coca-Cola is a very safe investment. And we're using Coca-Cola basically as a regular source of income. And we're not expecting too much more growth from Coca-Cola in the future. And then over the past 5 years, so here's where you can see that, Coca-Cola has grown by about 40% over the past 5 years. But that's probably about half the amount that the S&P 500 has grown at. So it's significantly lagging the broader index right now. But what happens with Coca-Cola is that it would tend to underperform in times where the stock market is overperforming. And then when the stock market is declining a little bit, investors will find a safe haven in assets like Coca-Cola because they're so consistent with their dividend payments. So that's a little bit of the price history here on Coca-Cola. Now we're going to scroll down and take a look at our position. So we have 36 shares of Coca-Cola at an average cost of $40.62. Put about $1,500 into Coca-Cola. And so far we've only made about $52 in the market. But also we've made some money off of dividends. So here you can see we've collected 35 cents per share, 10 shares. So we've collected $3.50 from owning Coca-Cola already. And since those dividends were paid out, we obviously bought another 26 shares. So we're going to be making a lot more money than just $3.50. So we're going to be making probably close to $12, $13 of dividends this next quarter when Coca-Cola pays out their next dividend, which should be around March 15th. But obviously that's not the case because that's today. So Coca-Cola should be paying out their next dividend pretty well soon here. Now looking a little bit more into the stats on Coca-Cola. So the things that I tend to look at with a company are market cap, which is the third box down on the right. So you can see it says 179.97 B, and the B stands for billion. So basically Coca-Cola is worth about $180 billion in the stock market currently. That's a pretty valuable company. It's definitely significantly larger than a company like Fitbit, which is only worth about $1 billion in the stock market. And then there's also Apple, which is up over $700 billion in the stock market. So there you kind of can see the relative value of how expensive Coca-Cola is compared to Fitbit, compared to an Apple. So we bought Coca-Cola when the shares were around $40 per share because that's a pretty good price to get into Coca-Cola at. Despite their price to earnings ratio being relatively high for a safe company at 28.08, we believe that that's because their earnings haven't really been too positive or too great recently, but we're expecting that their earnings will actually be increasing in the next couple years here. They've made some significant cost savings decisions by selling off a piece of their bottling business to a subsidiary. So basically that's not a part of the Coca-Cola company's earnings anymore, and that should basically improve profit margins and increase earnings over time. So that's obviously enough about Coca-Cola here. This is a company that's a dividend aristocrat. They've paid dividends for over 100 years, and they've been increasing their dividend payments every year. And the reason why we love Coca-Cola is because Coca-Cola has about 20 brands that are doing more than $1 billion in sales each year. So Coca Cola is essentially just a cash cow, and they generate tons of money, tons of free cash flow every single year that allows the management to pay out a significant dividend, and it allows the investor to have a pretty great confidence that these dividends aren't going to be disappearing anytime soon. So the next company that we said we were going to compare Coca-Cola to was Pepsi. Obviously, everybody knows the classic debate there, like what is the better soda, Coca-Cola versus Pepsi? Well, that's a very specific comparison. It's comparing two sodas, two colas directly to each other. You'll probably get a 50-50 opinion on that. It's tough to say the truth. But with the stock market, it's very interesting because there's a lot more to these companies than just Coca-Cola the drink and Pepsi the drink. So as you can tell, there's a stark difference here. Pepsi has significantly overperformed Coca-Cola in the past 5 years. They've grown at almost 100%, while Coca-Cola was near 40%. So Pepsi is growing at a much greater rate than Coca-Cola is, but all that means to us here at Abbey Finance is basically that Pepsi is a little bit overpriced in the stock market, and we really wouldn't be looking to pick up any shares of Pepsi right now. So how do the two businesses compare, and what makes Pepsi a little bit more of a growth company compared to Coca-Cola? So this little about section here in Robinhood is actually extremely important, and I would recommend if you're using the Robinhood app that you do take a look at the about section, because it'll give you basic details about the company that you really need to know if you're going to be investing in the company itself. So PepsiCo Inc., they're a company that has marketing, distribution, and sales of beverages, foods, and snacks. So that is what makes Pepsi unique compared to Coca-Cola. Selling foods and snacks really diversified their business. They purchased the Frito-Lay company. They have ownership in the Quaker Foods company. And they're selling all different types of snacks and foods. They own the Aunt Jemima brand, the Chewy brand, so Mountain Dew, Gatorade. The list just goes on here. So Pepsi has a very diverse business in the food industry. That is the reason why Pepsi has grown at a rate of nearly 100% over the past 5 years. So this is a comparison of two soda companies, but one company, Coca-Cola, has a lot less to offer in the overall business than Pepsi. But as a result, you're going to be paying a little bit more for Pepsi in the stock market right now. We think that if the stock market were to announce some bad news about Pepsi, maybe the price were to drop down below 100 again, we had missed an opportunity here in December, but we just didn't have the capital to be picking up some shares of Pepsi. If Pepsi were to drop below 100 again, we would definitely be making a purchase into the Pepsi company. Great, so I hope you guys enjoyed this video. It's a little bit something different. We're comparing two companies as opposed to just talking about one specific company. So give me some feedback. Let me know if you guys enjoyed this video and if you would want to see some more company comparisons in the future. Thanks for watching. This is Abbey Finance signing off.